The Inland Empire is actually experiencing some changes, and I think we have a graph here that's about to show us how many listings we have on the market. You can see that there has been a rise in listings, but we haven't hit anywhere close to the peak for years before. So you can see in that chart where we are as far as growing listings on the market. I think the biggest factor that is having properties sit on the market a little bit longer now is the demand has gone down, which is a direct impact from the interest rates having been raised, I think, as we all probably know. With that being said, as far as inventory goes, we still haven't even hit the 2019 levels, and we actually have a lot less inventory than we did 3 years ago. Again, what we're watching is the demand and the impact of interest rates on the sale of real estate. Values are not going up as like they were before, but they really haven't gone down. I think as long as homes are being priced realistically, and they are also being marketed properly, and they are being taken care of, and we're not letting properties with a lot of deferred maintenance go on the market, they are selling still relatively quickly. And we do have a lot of investors that are starting to reach out in the hopes that they will have opportunities to acquire property in the near future, which again is a good indicative of more activity to come on our end.
Okay. Well, Krissia, also let me piggyback on that. With the interest rate going up, it gives a lot of people an opportunity, does it not, for people to be able actually to buy a property where 3-4 weeks ago people were bidding $50,000 over market and you had 17 offers. So with the interest rate going up, that actually gives somebody that needs a property the opportunity to not only be able to buy it, so to speak, but also not have to pay another $50,000 in premium, correct?
So, right. So what we were seeing 6 months ago is that people were overbidding $30,000, $40,000 because they could, and because we had more people that were able to afford larger mortgages. So right now what we are seeing is a much easier entry point. And we actually have had a lot of investors reach out because interest rates are not definite. They're not indefinite in duration, I should say. That's something that investors are able to play with over time, where the ability of actually getting your offer accepted and not having to bid $30,000, $40,000 above asking is a huge opportunity for a lot of our clients.
Yeah, no doubt, no doubt. Yeah, we saw that. 12, 15 years ago, people were paying even 8, 9%. They own those properties, and then they were able to refi them down in the 3s and 4s, which was amazing, in the last couple of years. So that's definitely where a lot of people are looking at it as, it's a negative. It's got a lot of positive to it to be able to buy in this market. And another thing I'd like to add, even on a couple of properties I looked at that were brand new in your Moreno Valley, Paris area, because of the rents escalation are so high, where let's say 2 years ago, the cash flow to rent ratio to price ratio was off. Now it's come back in sync, even though the properties have went up, but now the rents have went up a lot more than even the properties. And so now it starts to make sense to buy, where 2 years ago, it was too much negative cash flow, and we're not seeing that now. So that's huge.
And let me tell you this, I had an investor call yesterday and say, once you see that inventory starts backing up a little, let me know. I'm ready to buy 2, 3 houses. I don't mind carrying a negative cash flow for the first couple of years, because we know how that's playing out in our market. So yeah.
Not only that, ladies and gentlemen listening, is even if you have a little bit of negative cash flow in the first couple of years of investment, if you're in your earning years of your career, you almost want that because you need the tax write-off. Now, if you're on the backside of that and you're starting to looking at retiring, not so much. But if you're in your earning years, to carry a little bit of negative, as long as you have the reserves set up, which we would require you to do, that will carry that property for some time should something happen, then that's not a problem. And your CPA, if they're a real estate, what we call CPA that really loves real estate, they would let you know that as well. So awesome.